Let me set the stage for you. In the midst of everyone fearing a recession, the largest bank collapse since 2008 occurred. The depositors were in a confused frenzy, and they didn't know exactly what was going to happen next, so they started to look into other risky banks. This only led to more bank runs in regional banks such as First Republic Bank, and this suspicion even led to banks across the world failing, such as Credit Suisse. All of this happened in just a few days. And now the bank that started all, Silicon Valley Bank, or at least what's left of it, is being bought up by First Citizens Bank. FCB bought around $110 billion of Silicon Valley Bank's assets. But how did we get to a place where First Citizens Bank could do this, considering that just last year they had $100 billion less in assets than Silicon Valley Bank? And what does the buying up of SVB assets mean for the banking industry? Well, let's start at the beginning. During a poker game, Bill Biggerstaff and Robert Medeiros thought of the idea that would later become Silicon Valley Bank. In 1983, the two of them and the CEO, Roger V. Smith, made that idea reality. Their idea that they believed would revolutionize the tech startup industry was to create a specialized bank that would conform to the astonishing speed at which a tech startup might go from a proposal being passed around a room full of friends to an incredibly large company with a ton of financial backing. It frequently gave out loans with low interest rates compared to other banks for houses and other personal ventures of founders based on the company's valuation. Also, in a space where failure is looked at fondly as a learning opportunity for future endeavors, this bank would have to be prepared to take on that risk. Although these principles were very important to SVB, the function of creating a close-knit network of founders, workers, and investors where ideas could quickly be picked up and made reality defined Silicon Valley Bank. SVB frequently held dinners and mixers for people in the tech startup world. This community that SVB spent so much time creating was also the reason for its quick demise. In the hours leading up to the bank run, many depositors were sending inquiries about the future of SVB in group chats with other depositors and investors that they most likely met through SVB-sponsored events. And when a consensus was decided upon to leave the bank, the entirety of the community was on board. The next day, SVB customers had tried transferring $42 billion of deposits from the bank. SVB invested a lot of money it had in government bonds. A bond is a loan to a government or company in which they pay you back with interest over time. The value of a bond is based upon that interest rate. So if you bought a bond with low interest rate, let's say 2%, but the Fed raises the bond interest rates to 3%, then the bond you bought is less valuable than the bond someone could buy right now with a 3% interest rate. Silicon Valley Bank bought billions of dollars worth of bonds, but as the Fed started to raise interest rates to slow down inflation, the bonds that SVB bought became less and less valuable. Rising interest rates coupled with investors that were hitting financial troubles, and you get a large withdrawal of cash that led to $1.8 billion of loss for Silicon Valley Bank and an erosion of confidence. All of this led to the largest bank collapse since 2008. But now it has a new owner, First Citizens Bank. The government brokered this purchase in hopes that it will increase trust in the banking sector, which would spell the start of the end to the banking crisis, but still too early to tell. Currently, SVB is in court, and it looks like regulators are partly to blame, since they knew the risks that SVB was taking, but stopped short of ordering them to change their practices. But that doesn't take the blame off of the executives for not changing their ways. The government must deal with how they're going to regulate regional banks in the future, since what happened to SVB also happened to many other regional banks like First Republic Bank. But for now, we don't know what will happen.